Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Monday, August the 6th, 2018, and this is the Daily Report for Gold and Silver. A continuation of downside selling pressure in the precious metals markets, taking gold prices lower in terms of futures by about $7.60. Most active December is currently trading at $12.15, and it is a low of $12.1440. When we look at spot, because spot is really giving us a better idea of current pricing, is sitting at $12.0730, and that's down $7.10. The precious metals complex as a whole is under pressure today. Silver about 16 cents at $50.30. Platinum also 24, and then palladium also losing about 0.8% or $7.40, trading at $900 per ounce. Interestingly enough, that is all within the light of a stronger U.S. dollar, and the dollar now, at least for today, holding solidly above 95. We realize that was a former level of resistance, and if we see the market trade steady in this area, the level of 95 will become support. And so if that's the case, we can look for a stronger U.S. dollar in the weeks ahead. Equities faring fairly well today. Dow Jones Industrial Average gaining fractionally, up just under 0.2%, 39-point gain at 25,502. S&P also gaining about 10 points at 2850. And the NASDAQ Composite doing very well, 0.6%, 46-point gain at 7858. Lastly, Bitcoin futures is falling and has been falling for the last couple of trading days. That is currently trading at 68.90, a decline of $480 on the day. Traders, a combination of a strong dollar and favorable risk on equities environment continues to pressure gold pricing. Gold down about $7.60. We are looking at the most active December's contract. And on this particular chart, I do have two sets of fib retracements. The first set goes from the lows back in December of 2016 at 1124. And I also have one that goes from 1045, the all-time low after the market began to go into a multi-year correction and trade lower. Because what we get is a really bottom line area, and that comes in at approximately $1,169, and that is the 0.618% retracement of the move from the lowest the market had been to these highs, which actually also matched the highs that came in 2016. The key right now is we did break and close below this particular price point. Market's trading at $12.15, $12.1750. That is the point to break. So we haven't had a hard break below this price point, but we did get a hard break below it when we look at spot pricing, and we'll do that in a second. The other thing that is worth noting is when we take a look at our moving averages, and we know that we had this death cross that came in back, about a couple of months ago at least, and the one thing that we are seeing is a widening. And whenever you get this widening, that's telling us that the trend itself has still got some momentum, and more than that, that there is more downside potential in gold. And traders, another way to look at this same data, of course, is to convert our candlestick into a Heikin Ashi, and I have just done that. We can see that we have had clear and defined periods in which we would have solid red. That would be followed by minor upticks here, a 3-day uptick. Then we get this market moving down. But as this market has been trading roughly in this area, you can see that we have had alternating candles, and we are back to red, but that's telling us that gold is attempting to find some sort of a base My sense is that the fundamentals driving this market, as long as they stay constant within the market, we will see a solid break below this particular price point and head towards $1,200, especially in spot. And traders, I've just put up our physical chart or spot gold. Spot gold currently at 1207. We can clearly see that in today's activity, the market opened below the 0.618% retracement and then closed well below it. It hasn't gone as low as the low we saw on Friday, but nonetheless, I consider this to be fairly major chart damage. And based on that, my recommendation is if you are not short, you should be getting short. And especially if we see a break below $1,200 vis-a-vis spot, we most certainly will see the market go to, I believe, at least $11.75. Therefore, traders, my recommendation is for those that put on short positions following the announcement or the outlook that I sent out at the conclusion of the FOMC meeting last week should continue and remain short. Those who are not short should get short. And in terms of particular placement of stops, you want to put it above the 0.618% retracement. And traders, in the December most active futures contract, that is about 1217.50. My recommendation would be to put the stop above 1225 on a stop. I do believe we will see a further decline and lower pricing. Market is now in the afternoon session at 1215.80. And as I said, if you are not short, I recommend initiating shorts, putting stops at around 1225. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.